Everybody, good morning. Welcome to today's Best Stock Picks. My name is Pete Renzulli. It is Monday, May 11th, 2020. Got an interesting setup today. The futures are kind of neutral. Obviously, most of the last week, we had a really strong week in technology, and we're actually going to take a look at that again. But something interesting is happening on the daily charts, and I think it's kind of cool to really dig in a little deeper than just say it's going up or down. And not necessarily to start trading in the opposite direction, not necessarily to bail on any good winning swing trades you might have, but just to notice stuff that you might not have noticed before that makes you a little bit more intelligent in how you plan to analyze the market, analyze your trades, as well as how long you plan on holding your trades. It's been a little frustrating on the day trading end of business, where we've been having explosions or sideways. There's really no other way to put it. We haven't really been having the nice up and back that we look for on a normal basis. And I'm going to show you why. I'm going to show you why it's been a little frustrating, where you really had to be more of a sniper than feel like the entire market's going up, which it actually is, but it for some reason, it doesn't feel that way. We get these opportunities during the day where you nailed the entry, you get a really good spot, and then you feel like it takes forever for it to produce. There's no other way. You're not sure if you're right. You're not sure if you're wrong. And even the swing trades, for that matter. We've been having these days where you're going up and the next day it's going down and the next day it's going up. It's been frustrating. But here's the point that I want to get across. You can't fight the tape. There's no other way to put it. I think that we're going to take a look at the NASDAQ a little bit today, and some of those stocks. Some of the market stocks that we've been trading are a little bit overdone, where they keep gapping higher, and the room to go, the profit potential has diminished to the point where we're almost taking one-to-one risk reward. So we're kind of almost looking for a lower opening before we bid again. As opposed to where we're normally looking for a higher opening, looking for some follow through, because we want that distance between a potential entry and profit targets to expand. So we're going to look at some breakout trades, some trades that might not trigger today, but trades that are pretty close. We're going to take a look at the stocks that have been the thorn in my side, LVS and Win, and set up some trading opportunities there as well. And some online retail stuff that we've been looking at for a while. So we're going to go over the charts. I'm going to point out what I meant about going a little deeper into the chart than just looking at whether or not we're going higher or not. And that's why I don't use moving averages on my game plan. I get a lot of questions about that. Why don't I have moving averages? Everybody watches moving averages. And I do. I'm aware of them. I pull them up as a final decision-making apparatus. But I don't use them when I'm actually doing the game planning or doing my analysis, because when I'm reading the tape, what I'm about to show you kind of gets ignored. It's one of those things where you kind of get blindness to stuff that you should be paying attention to. So we're gonna head over to the charts right now and take a look at what I'm talking about. And specifically looking at the NASDAQ here, what's kind of interesting is you can see the NASDAQ, which we brought out last week, has crawled its way back above the Q specifically, have crawled its way all the way back up to the pandemic start. So that's incredibly powerful. You can see it actually here a little bit better. It's actually well bid 5 out of the last 6 weeks. But here's the problem that I have. As we keep going higher, we keep getting more closes below the open and indecision candles. We're not seeing these momentum type days where you get like 3 or 4 of these kind of days in a row where it opens on the low, closes on the high, and you just, woo, there it goes. We're not getting that. This is usually what leads to a change of trend. When you start to see more closes below the open as you're going higher and indecision candles, that's not a market you should have massive long-term conviction in. When I'm talking about long-term, I'm talking about over the next week to a month, right? So the picture gets even a little bit more interesting when we throw volume in there. You can see that the negative days had higher volume, other than this one day, than the rest of the days on the way up. And actually last week, where we had these indecision candles and closed on the highs on Friday, volume was not as strong as the negative days. So we're actually advancing on lower volume, and we're seeing a lot of days that are closing below the open. So again, I want to be clear. I'm not saying to bail on winners, if you're holding swing trades longer. What I am telling you is something different is going on in price action. And that means that you should be tightening up your trailing stop on longs, if not scaling out of some of them, or at least considering. Now, we're still trending higher, obviously, right? We're well bid 1, 2, 3, 4 days in a row and looking for another move to the upside. We're actually looking like we're going to open lower, which is what we want to consider a new long. So let's actually get into some stocks that might not necessarily be triggering now. And you can see here, they're not overextended, but if they do take off, there's some room to go. I'm going to stick with some technology stocks to start out. So AMAT is one. I like over 54. Not yet. I want to see it get above this level. Next one is Broadcom, AVGO, very similar setup. MCHP, so you can see that we're kind of sticking with the same types of ideas, right? Not quite breaking out, but room to go if they do. But more importantly, they're not overextended. Next, we have Seagate Technology. Again, not there yet. Don't get involved yet. I'm not getting involved yet. So Seagate, for example, I want to see it get over 53. But I do like this bounce, but I want to see it get above that level. Next, we have Ntap. Again, you're starting to see these are stocks that are setting up to have the next move higher. I like this one a lot, actually. CRM is another one. This one's actually a little overextended. And actually, CRM would be one that I'd be looking to see it open up higher and see some profit taking. This is a super, super good example of what I mean. For some reason, I keep using super today. We're actually heading into resistance. So we're actually heading up to the place where sellers at last came in and pushed the stock down in a big way. Now, again, yeah, of course, it was pandemic related, but you can't ignore the fact that that's the level that it got shoved down the hardest. So this is a good example of why I'm not looking at some of the stocks we traded last week, because they are doing the same thing where there's not a lot left on the bone. So I'll be looking for this to open higher tomorrow. Qualcomm, open higher today and find some profit taking. Again, Qualcomm, another one where it keeps hitting. I like this one above 82, not quite yet. The ones that have been a real thorn in my side lately, where I really like them long, but seem to be failing. But these are actually a good example of what I'm talking about in the tech stocks, where they got to get past that level and hold there before we look to confidently trade them long. I thought we had that last week with Win, because it actually does have some room to go. I was looking to bid this pullback and looking for another leg up from here to here. The same amount basically, but we didn't get it. We kind of pulled back, got stopped out, and now it's bouncing again. So because it failed at this level, I want to see it get above this level. I want to see it get above 95, stay there and pause. And you can see LBS is kind of the same thing. I actually have gotten quite a few emails about, do I think the pandemic will affect these stocks? Well, maybe for the last 3 months, but it seems like everything's reopening again. And it seems like a lot of people have no problem being out there. So we'll see what happens. I don't really care about opinions. I'm just paying attention to what I'm seeing in the price action. And right now, the price action is telling me that there's interest. Wayfair obviously has been a rocket ship, almost 600% rally off the lows since March. And look, the bottom line is it's eventually going to turn around and see some profit taking. But until that happens, you have to still be looking for long. And again, if you look on the intraday basis, this is exactly why. This was Friday. How could you ignore a move like that for the fear that it might possibly turn around? You're going to be wrong once. Trade it long until it finally does roll over. Next, we have Uber, actually. And Uber did a little bit of rallying last week on job cuts. But again, it's hitting new levels here. I don't like the fact that, very similar to what we looked at before in Qualcomm, that there's resistance here. CRM. But I do like it if it can pause up here in this 34 area, then looking for 42. And Lulu actually is an interesting one that I've been tracking for a while. And you can see actually my old school trend lines. This is how you really work the charts. We broke the trend here, but did not stay there. Now we're actually clean above that level. As long as it stays above 220, I still like it long, looking for a run up to around 270, which is a pretty decent amount of room. On the short side, like I said before, I have nothing on the short side. That's actually the best that I could come up with. I know a lot of people are talking about these guys, Wells Fargo and the banks. Look, you could definitely be looking to short some of the banks. I have been shorting the banks, but only shorting them on rally, JP Morgan specifically. And again, they're only day trades. I don't have a longer term opinion on them right now. The guidance was bad going forward. The market's still going higher. If and when and until the market turns around, I'm only holding or trading them on a short term basis. But again, the order flow, the smart money that we're trading says the guidance going forward is not good. So that means the next 3 months from earnings, which came out a couple of weeks ago, maybe 3 weeks ago. So while the market's going up, I'm shorting rallies in these stocks. If the market should happen to turn around, I'll be looking at short breakdowns and possibly even hold them a little bit longer. So that's some trade setups for heading into today. Not a lot new. That's really the kind of the theme today. We're still looking to be long. It's really just a question of how much room is left in the long, and some breakout potential trades coming up here too. So really, breakouts are the idea for the day and maybe even for the week. So the question is, what happens if the market does start to see some profit taking and roll over? Can you trade those stocks on the short side? I don't recommend it. I'm not a big fan of shorting strong stocks. I'd rather see you wait for a pullback that you could bid into again and hold those stocks for the next 10 days to 2 weeks for a new swing trade. So those are the opportunities we have today. Really, breakouts are the play of the day, or trailing some good swing trades that you might have for the week. So if it's last week, you held strong on the highs coming into today, look for a higher opening today. And what happens around that higher opening is probably going to dictate the week. So have a great day, everybody. I'll speak to you soon.